We're tracking a major story tonight. Over $500 billion has just been wiped from the crypto market in a massive global sell-off, and it's sparking some serious panic among investors. In this explainer, we're going to break down exactly what's causing this collapse, how traders are reacting, and, of course, what could happen next. Right now, we're starting with XRP, which has been hit especially hard, plummeting nearly 11.3%. And let me be clear, this isn't just a minor dip. No, this is a pretty clear sign of a much bigger storm brewing across the entire digital asset landscape. So first up, let's talk about this market freefall. You see, this isn't an isolated event hitting just one coin. It's a domino effect, and it's hitting all the key cryptocurrencies, erasing weeks and in some cases even months of hard-won gains. To put a number on it for you, XRP has dropped all the way down to $1.44. That's its lowest price point since back in November of 2023, and it marks a huge reversal from its previous highs. Now, for any traders watching, this is the really crucial part. The price has just smashed right through a key support level, right around $1.60. You can think of a support level as a kind of floor where buyers usually step in to prop up the price. Well, that floor has just broken, and that's a very strong signal that sellers have taken firm control of the market's momentum. So what's behind all of this? Well, it leads us to something we call the Bitcoin contagion, and it really is the main driver behind this widespread panic we're seeing.
It's the one question on every single investor's mind right now. What is driving this massive sell-off?
And the answer, as it so often is in crypto, leads right back to the market leader. Bitcoin's own price decline is fueling a huge wave of what we call risk aversion. You know, when Bitcoin falls, it tends to drag the rest of the market, including major assets like Ethereum and XRP, down with it. It's the classic contagion effect in action. With prices in turmoil, you better believe investors are bracing for impact. So how exactly are traders reacting to all of this chaos? Well, the data is painting a really clear picture. Traders are taking a very defensive strategy right now. We're seeing demand for downside protection just soaring, with a huge surge in bearish put options. Basically, traders are betting that this volatility isn't over. In fact, they seem to expect it to get even worse. Now, you might be asking, what exactly is a put option? Well, to put it simply, it's a tool traders use when they think prices are going to fall. It gives them the right to sell an asset at a preset price, which protects them from more losses. It is, for all intents and purposes, a direct bet that the market is heading lower. But here's where the story gets really fascinating. Let's look at sentiment versus reality. Because despite this absolutely brutal price action, there's a really surprising disconnect when we look at the conversation happening on social media. This perfectly illustrates the divide. On one side, you have the market reality, sharp price drops for Bitcoin, for Ethereum, and for XRP. But on the other side, social media sentiment for XRP is still overwhelmingly bullish, even as the mood for Bitcoin and Ethereum has turned pretty sour. And we've got the numbers to back this up. Analytics from Sentiment show XRP with a bullish score of 2.2. Now, what that means is for every negative comment out there, there are more than 2 positive ones. You can compare that to Ethereum, which is sitting at a neutral 1.0, and Bitcoin, which is firmly in bearish territory at just 0.79. So what does this big difference in opinion mean? Well, according to Sentiment, when the market overwhelmingly expects prices to fall, it can actually be a contrarian signal. This widespread disbelief can sometimes trigger what's called a short-term relief rally, precisely because that negative feeling has become so extreme. Okay, so let's pivot from the immediate chaos and try to look at the path forward. It's so easy to get lost in the day-to-day price swings, but what does the long-term picture actually look like, especially for an asset like XRP? Well, looking at a few different analytical models, we can start to get a picture. As you can see, even the more conservative forecasts are predicting a recovery and then steady growth over the next few years. The optimistic scenario even suggests a potential push past that $5 mark by 2030. But that depends on a few very key factors. And the crucial takeaway here is this. The way these assets are being valued is shifting. Analysts are moving way beyond just hype and speculation. Long-term value now is being tied directly to real-world utility, especially for assets like XRP that operate in the global payment space. But that optimistic path to $5, it's definitely not guaranteed.
It really hinges on 4 key conditions. We'd need to see exponential growth in its on-demand liquidity volume, which is what's used for cross-border payments. We'd also need clear global regulations for it to maintain a tech advantage, and of course, a favorable global economic environment.
Which leaves us with the big question as we wrap up. Are we just witnessing another volatile market correction, a normal part of crypto's cycle? Or is this something more? A fundamental reset where only the projects with true verifiable utility are actually going to survive and thrive in the long run? The market is moving incredibly fast, and things are changing by the minute. To stay ahead of the news and get the daily analysis you need, make sure you subscribe to the